And good morning, everybody. Welcome back to Neely FX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, building expert advisors for the MetaTrader 4, MetaTrader 5 platforms. Kind of backing off that a little bit and getting into prop trading. So that's kind of where my focus is. This is a entertainment channel about Forex trading, so let's go on to our risk disclaimer screen. I want to get this done real quick because I live in the United States and this is required by law to my knowledge. I used to be a broker and I used to have to read this on every phone call back when we used to make phone calls. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker. I'm trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. Now, the CFTC risk disclosure goes something like this: Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So let's get into it. Let's see what's going on today. So right over here we have on the docket today, we don't have a whole lot of activity going on. 2 o'clock we've got the FOMC minutes. We'll see what they were talking about before they decided not to do anything, not to raise rates or lower rates, which is depending on your belief. And now I'm joined by Henry of the Forex Trading Parakeet. So he's with us today. See, there he is, chirpy. So let's get into this this thing right here. Now I mentioned that the trade possibility yesterday. Well, first let's look at the dollar versus the euro. We do have some other things going on here. Let's pull the chart down here. Our 4-hour timeline has been somewhat violated. So we're going to change this. Pull this down about here. And it is still looking like it could break that. Again, it's in a strong area of support right now. So that, strong area of support right there. So that's what the green means, is that a lot of buyers come in. Institutional buyers could come in at this point. They may not. Who knows? We also have a bearish break of structure here, which could indicate that it's going to drop lower than 174. Well, part of it's going to give up 117. It's possible. Not sure what's going to happen with that. Not really interested in taking a trade on that. Let me see what else we got going on. As you see, I've got a trade going on here that I did not cancel out because it's still active. Got it making 34 cents so far. I'm going to close that one out because that trade has already been done. I did take that trade yesterday, and this is what this looked like. Logging my other machine. So the euro is looking like on the 4-hour level that it could give up 117 today. Again, that's a big psychological level. Not really interested in getting into that trade until we have some more confirmation of stuff. Can I do this? Oh, look at this. I can go to this other screen and see the Japanese yen. Now, I did take the trade here yesterday at 134. I have the right platform up. Let's see what we got going on over here. That's not the platform I want. Close. This is the platform I want. Okay, so I did take that trade. It's coming back actually. I had a lot to say till I saw this. This trade is actually coming back. I started chasing it yesterday, so I got in at 178 and realized I had a 0.02 size, which is the size for my live account, which it does not have as much money in it as my demo account, which is $47,000. Trying to get used to trading with bigger numbers so I can get into the prop trading arena. So I came in at 175, 147.05. I thought that'd be a good place to come in. It should run after that. It didn't. It gave up right back to 165. So we're getting kind of a weird spot right there with the yen versus the dollar. And as a matter of fact, it's starting to look like a pin candle. So that's not necessarily a bearish move. If it were red, I think it would be bearish, but it's green, so it's not bearish. This is all pretty objective too, as far as this goes. So let's get out of my trading account for a minute. I'm down $800 or $750, $730 in that trade right now, which is fine, because I've got $47,000 in that account, and I'm nowhere near stopping out that trade. So let's get back into here. The dollar versus the yen. My 4-hour trend line here has been somewhat needs to be repositioned. Pull that up here, and now it's looking like it's going to. Well, I mean, considering that's the latest top, I would like to see that come up and bounce off of it again before it tries to do that again. In a perfect world, that's what would happen, but we're not there. Henry likes my glasses. Chirpy. So that's what we've got going on there. The thing I wanted to point out is here this was a lot different a few minutes ago. These were all red or zeros. They're showing a lot. The bond rate, the bond yields in the United States are not going up as near as quickly as they are in Japan. What that means is that the yen is going to be a more attractive investment medium, and the dollar will become a less attractive investment medium compared to the yen. That means the carry trade is going to continue to get unwound. Does not necessarily mean that that the world's going to crash and burn, but that the long-term carry trade that's been going on for I don't know 20 years could possibly unwind. What we're going to see then is the euro's value going. The yen's value going up, the dollar's value going down based on the bond yield, and then we're going to see this start taking a bearish turn. It's not really going gangbusters right now, but that's a possibility of what could happen with this. So that's where we are today. Let's take a quick look at gold and silver real quick, because those are two of my favorites too. USD. I like seeing what they're doing because I do carry positions in gold right now. They're not futures positions, but there are ETFs. And this is got a bearish break of structure here in gold. So this could mean that the BRICS talks are falling through. They're going to have to come back and dollarize something, because something's going up. But well, the yields are going. They're not really moving quite enough to come up with any solid conclusions of anything. But it's looking like we're going to 32.94. It gave up 33. Could come down here in this area and then bounce off of that. Who knows? But that's most likely what's going to happen, and barring some catastrophic event. Let's see what silver's doing now. Silver's just being silver. Silver trades fairly erratically compared to gold. It's kind of all over the place. There is a strong industrial demand for silver too, and medical supplies and a lot of other areas. So that's another area to keep up with gold for. This is about all I got today then, because everything kind of changed a little bit when the American market started coming on to play. This is my demo account. I'm down $800 in that right now. 776. It is forming that pin formation, that pin right there, that's making me kind of nervous on the daily charts. But my stop loss is set. Oh, look at that, no stop loss. Need to fix that. Modify. Always trade at the stop loss. I don't care what the latest pundit on YouTube or anywhere says. I ran into one guy that says never trade at the stop loss. That means you're admitting that the trade could go bad. Yeah, it also means you can't lose all your money too, because you can certainly lose a ton of money just as quickly as you put it in here. But one of the things that I am guilty of in this part right here is overtrading, because it's although right as the Asian markets opened last night, it looked like it was going to go further and possibly take 147.50. But it didn't. That was the whole reason for my coming into 147.5. I'll probably go 147.05. So that's kind of on me as far as overtrading goes. Don't overtrade; it's bad for you. However, this trade is still alive, and I put the same put a 25 pip stop loss in from where it is right now, which is about where I would have put it at the open, because we're not far from where this whole thing opened up anyway. So we'll see what happens tomorrow. In the meantime, if you like this video, then be sure to like and subscribe to it. Subscribe to my channel, and we'll be able to make more of these videos. So happy trading. You guys have a great one, and I will talk with you later. Have a good one.